Hello, I'm Debbie Bell-Hosking for FinextraTV here at NextGen Nordics 2025 in Stockholm, and I'm talking to Majda Nogo of Worldline about instant payments and fraud. Majda, welcome.
Thank you, Debbie. Nice to be here.
It's lovely to be here. There's quite a buzz going on around us and all the conversations happening at the event. We are talking about instant payments and fraud. So first of all, if I can dive straight in, ask you what are the drivers, and do you think that regulation and legislation is enough to make instant payments a success?
Good question, Debbie. So I would say that if we think about it, the instant payments, I think they represent a fundamental change in financial infrastructure. So the main drivers would be, there are several of them, but I would really like to talk about and to mention first the economic opportunity. So economic benefits are huge. I think European Commission estimated that there are around 250 billion euros that are locked in payment settlement delays, and these are the funds that businesses they are eager to unlock them. So that's one. Number two, of course, our lovely consumers. Everything around us is instant. So why shouldn't payments be instant? You know, today you can get Amazon to deliver goods the same day. And why would money move more slowly than the physical goods? So that's the second driver. Then the third one that is becoming more and more relevant is this geopolitical situation and the opportunity for Europe to really build an independent solution. So it is, I would say, a financial sovereignty in action that is happening here. So, and then of course the regulation that you mentioned on top of that. But regulation itself, I don't think is it's sufficient. It's necessary, but it's not sufficient. Regulation will remove the barriers, but regulation itself will not drive the market adoption. So what I think is necessary for driving the market adoption, you know, we at Worldline, we've seen some successful adoptions of instant payments across Europe, in Netherlands, in Austria, in UK. They all have some elements that are common. There are some lessons learned. Just to be short, I will mention three of them. One is keep it simple. So the markets that have tried to overcomplicate the adoption of instant payments, they've failed. Keep it simple. Start with core use cases. Gain the adoption, then expand it. So that's number one. Number two, I would say, is the pricing. So Netherlands offered instant payments free of charge, and that has been one of the reasons or success factors for Netherlands and the instant payments in Netherlands to become a new normal. So don't treat instant payments as premium products. They should be treated as regular transfers. And last one, really important, collaboration between the banks, because I think if the market should not look at instant payments as a competitive advantage, it's not. Banks need to collectively look at instant payments as an infrastructure and invest collectively into applications and use cases that can drive the adoption. So again, legislation is here. The winners will be the one that see beyond compliance and see this as an opportunity.
And listening to you talk, it's so interesting because you put it in context, and I'm finding that really interesting. So as we head towards universal adoption of instant payments, how would you say concerns over security have evolved?
You know, one thing that is challenging with instant payments is its character, or basically finality. Mm-hmm. Because once you do an instant payment, when it's executed, there is no reverse button. And that fact has actually transformed for fraud dramatically. So what we are seeing now, it's really interesting, this shift in how fraud is behaving and where it's appearing. So basically, we see now that psychology beats technology. What I mean with that is that social engineering is replacing partially hacking. So fraudsters, they try to manipulate humans instead of systems. And that's possible because of the nature of the instant payment. So we've all seen these cases that they create a false emergency that goes beyond rational thinking and tell to their victims, you need to act now because your account's being compromised and so on. Really manipulating and using the weaknesses of the humans. I think I've seen some reports that the social engineering fraud increased by 40% only the last year. So that's one trend that is really increasing. The other one is that fraud is getting industrialized. So we're not talking about Nigeria letters anymore, people sending emails in bad English. Now we're talking about organized operations with clear roles, moving the money really quickly and making it difficult to recover the fraud. So basically, when you as a victim discover that fraud has happened, the money is already gone. And I think Europol published a report showing how within a minute from when fraud has been executed, the money has been moved across multiple accounts and within several countries. So that's the second trend. And the third one, I would say, is how the tools have evolved because people are using, again, the big challenge is this recovery gap that is difficult to do, and they have seen a real increase how fraudsters are becoming more and more better at this. So we have investment scams, we have romance fraud, employment scams, deep voice technology really mimicking and impersonating victims. So there are a lot of new ways to trick the humans. And as I said, compared to cards where you can revoke around 80-90% of fraud that happens, with instant payments you can't do that. So the approach needs to be different. While with cards it's about detect and recover, in instant payments it's all about prevention because you don't get a second chance. So I would say these are the things that the banks and financial communities are looking at now and being exposed to as a new trends that we were not exposed to before.
And you're talking there about prevention. So my question to you is, are there some fraud protection processes that may actually be preventing the legitimate payments going through?
It's always a never-ending discussion on consumer journey that needs to be frictionless and security, and it's about the balance. Of course, there are fraud systems that are in place that even stop valid transactions when they are trying to discover the bad ones. Not all fraud rules are implemented seamlessly. If financial institutions apply to rigid rules that are really not smart and not contextualized, there is a huge risk that a lot of valid transactions will be stopped for no reason. For example, if you have a rule saying that all transactions above a certain threshold should be stopped, or you stop the transactions to all new customers, that's not a good rule. Again, it needs to be smart, it needs to be conceptualized. If you have too many authentication steps with no context, that could create friction on a consumer side, and we know that if consumers experience that the security is too cumbersome, they will leave the legitimate transactions also. If you have too many manual reviews, that will take away the instant in the instant payment, right? So that's not good either, and it's a money loss for the banks. I think MasterCard estimated that around every false positive costs around 25 euros. So yes, if not implemented in the right way and in the traditional way, that there might be problems. However, there are good news.
Yes.
Luckily, we've heard a lot of talk about that today. There are new security measures that combine the security and remove the friction, or try to minimize the friction. So verification of pay is one of them. It's remarkably effective. So just a simple name checking can actually reduce fraud drastically. I think in Netherlands, when implemented, Dutch Central Bank published the numbers that the fraud decreased by 81%. That's amazing. And now it's part of the European Union legislation. We have AI. Generative AI is actually now capable to analyze thousands of different rules within milliseconds in order to separate the genuine, or identify the genuine risks compared to normal deviations. That's amazing, because that really minimizes the friction for consumers. Behavioral analytics, or biometrics, where we analyze how consumers interact with their devices, is also a fantastic tool to really work with, increase the security behind the scenes, where the consumers don't even notice that. Mm-hmm. And then I don't think it's in place yet, but there are some great ideas about these collective intelligent networks that will share fraud patterns between each other, that if a fraud pattern is discovered on one side, all the banks will be protected at the same time. That's amazing. So I would say there are a lot of tools in place, and the best systems are the ones that really can balance this proper risk and have a friction there, combined with and leave the normal transaction to be seamless for the consumers.
And Majda, as we bring our conversation to a close, just listening to you speak now, and briefly, are you sensing more optimism about instant payments?
Yes. I think instant payment. I think we are part of something much bigger, and I strongly believe that instant payments will definitely be a success. I talked about economic benefits. I talked about consumers. Don't you think that when consumers once experience instant, they will not want to go back to waiting? We talked about, we have the regulation now in place. We have technology. You know, what was not possible 10 years ago is now possible. Suddenly we have cloud solutions. We have a system of APIs, AI, fraud that make it possible to scale all of this securely. So technology is ready. We have the initiatives happening on a European level. We have API that will be a game changer. We have central banks having their eye on this, and I think what we do right with instant payments will be then used when central banks shape the digital euros and e-krona and so on. So yes, I believe this, and use cases are just popping up. You know, people talking about bill payments, they're talking about insurance claims payouts, in-store payments, instant salary payments. There are a lot of use cases that banks are working on. So I think, for me, it's not about if this will be a success, it's more about who's going to lead the change and who's going to lag behind. And also, in a way, I'm so excited about this because I really think, you know, like with the phones, I think we're part of something bigger. Like with smartphones, really made a revolution. So this is not evolution, this is revolution. We're not getting a faster horse, we're getting a car now. And the same way that the mobile phones shape our mobile usage in a totally different way. I think that's what happened. That what instant payments will do to the payments. It's not about moving the money quickly. I think this will be this will go beyond what we can imagine today.
And that's interesting, Majda. Thank you so much, because there's something you said earlier about you can't imagine the consumer wanting to go back to waiting. And you've ended your conversation very much looking forward, and let's see what happens next. So thank you for joining us.
Thank you.